Hi everyone out there. Just want a big welcome to David Scutt. Hey David, how you doing?
Very good, thanks, Matt. How are you?
I'm good. I'm good. Sorry, I've just, as I said, came in from a run, so you're just going to have to put up with me sweating all over the place, but a good distance. That's okay. No, it's great to have you on. Obviously, read a bit of your stuff, and now you're doing some interesting stuff at AusBiz. So maybe just a bit of a bio about yourself, what you do now, and and I'll ping you some questions about how you got there.
Sure. So as of Wednesday this week, I joined AusBiz TV as an anchor. So I've never done TV before in my life. I've done a little bit of journalism. I've done a lot more banking. So I'm just learning the ropes, how to go and present, how to speak, and make sense more importantly. So very excited about the opportunity to learn some new things and to work with a really talented group of people here.
So this is on-the-job training, really?
This is on-the-job training, exactly right.
Well, I'll go very light, don't worry. I'm much less experienced.
I appreciate it.
And you're obviously also a journalist as well. You do some coverage of the markets?
That's correct. So back in 2015, I went and joined Business Insider. So like I'm doing here, I walked into that job with absolutely zero experience. My editor-in-chief at the time, Paul Colgan, sat me down on the first day I started, and he said, "David, don't worry about doing any journalistic work. I'm going to go give you a bit of a rundown of how you should go and frame articles and a hook and a lead and all that kind of stuff." Yeah. And then about an hour into sitting there, he goes, "Oh, the Chinese trade data looks interesting. Write about it." So thrown straight in the deep end, and then that's how my role started there. And Business Insider was a great place to go and learn, and a lot of talented people, and much like AusBiz TV, a small group and ready to go and kick goals.
So it's a pretty recent career in journalism for you then, right? 2015.
It is.
It's not that long, but it's it's reasonable, but it's not like 20 years or anything. So
it is.
Yeah. So what were you doing before that? You mentioned banking, but go all the way to the beginning since finished university.
Okay, so I started off at ComSec, like so many different people around the traps here, particularly in Sydney where I'm based. Starting ComSec was just there as a phone jockey, taking orders. During that role, I got to move around a little bit within the various departments, and one of them I worked in was deceased estates.
Wow.
Which made for an interesting time, and I learned a lot about probate law, and I learned a lot about family fights at the same time, I've got to say.
I can imagine.
So that was quite interesting. Then I was lucky enough to be brought across into the institutional bank at the Commonwealth, and I started there, and I did a bit of FX and interest rates, primarily for high-end retail customers, and got myself going there, and had a lot of very, very smart people working around me, and a lot of more senior people who worked in the real institutional bank, the big deals, the corporate, the insto stuff, and that was great to go and learn about.
So for people out there, obviously the ComSec is the retail side of things, and obviously deceased estates is obviously another arm in that.
That's exactly right.
So, and then institutional banking, is that trading on behalf of ComSec or, managing risk when a client flow comes in? Because there's so many different ways you can cut and slice institutional. So what were you doing?
Yeah, so I was a dealer. So my job was basically the conduit between the customer and our trading desk. So I'd sit there and a customer would come in, either corporate or a very, very wealthy individual, and say, I want to go and sell 5 million Aussie dollars to go and purchase something in the United States.
Yeah.
And so I'd basically go and say, okay, we're going to speak to the trading desk. What's the two-way spread? Two-way spread, okay, go back. This is what I can go and offer you. I take my tiny little margin, my little profit margin to justify my existence. It was only very tiny as well.
Maybe it was tiny for you, but not for the bank.
Yeah, so and that's how it works. So I was basically negotiating on behalf of the trading desk and on behalf of the customers. So just trying to get a deal done.
Oh, awesome. And so how long were you at ComSec for? I was a
ComSec in the institutional bank. I was there for roughly about 4 years. So,
awesome.
I had a brief stint in the operations area of the Sydney Futures Exchange. It was a wonderful job working 24-hour shifts. Not you have to work 24 hours in a row, but you'd have to go and work sometimes overnight and sometimes in the evening, sometimes early morning. And I used that time to go and learn about order inputs. So I watched what the traders were getting and what strategies they were trying to go and implement, and basically peeling back the layers of the trade to go and figure out, okay, how are they looking to go and strategize? What are they looking to go and achieve by this? And I think that was one of the best things I ever did, because it gave me a grounding of understanding, okay, so this goes into this, this goes into this. And then from that moment on, looking at financial markets, whether it's bond market, currency market, equities, a lot of it just fell into place for me. So I'm very glad that I did that just over a year stint there.
When you've got money on the line, it's such a different, even your own or, balance sheet money, it's such a different, you're on the hook and you just got to like throw yourself in the deep end and learn, right?
Exactly right. You can't sit on the sideline. That doesn't help anyone, and you can't be reckless at the same time. So it's about back testing and learning, and from different mistakes. Always you'll make mistakes. So, even the best traders will go and admit that they've got a sharp ratio where they are losing less than 50% of the time. They're probably lying to you. It's all about letting the winners run.
That's right.
And the losers cut them when they've got to.
Yeah, no, it's a little bit like baseball. If you hit 35%, but you hit a lot of home runs, it's pretty amazing.
You'll get paid big bucks.
Yeah, absolutely. And so after that, journalism, obviously 2015, obviously there may have been a gap in between. So obviously the learnings you had in the market, obviously picking traders' brains, having risk on yourself, and now you get to represent that out in the public. What's your take about markets? Do you look at it technically? Do you look at value? I'm assuming it's technically from the way you describe it. I could be wrong. Like, how do you see markets?
Look, you've got to have a combination of everything. You can't go in being naive and say, "Oh no, I'm top down, fundamentals only." If you take that, you're going to get absolutely burnt. You look at the fundamentals picture at the moment, what's going on in the current market landscape. To go and say that the S&P 500 is now erased its decline for the year, and we're about to see an employment report in the United States that could have unemployment somewhere in the realms of 14% to 21%, even more. Some people are expecting. That, from a fundamental perspective, you would not be long the SPY. You would not be long the S&P 500. You would not long the Aussie dollar. But that's what people are obviously doing at this junction. So a lot of it's technical. A lot of it's understanding also the reaction function of central banks.
Absolutely.
Central banks have been becoming an increasingly important conduit in what markets are doing nowadays. So that's where a lot of people are starting to direct their attention to, should I say, about how they should position and what they should be investing in.
Yeah, I mean, I was recently short and I just had to get out because basically the Fed's behind what's going on. There's so much money being pumped into the system. It's just like, anyway, that's just the way it goes, right?
Well, they learned from the GFC. That's the one thing that they learned, that they had to go hard, they had to go early. And we've seen this time that they have gone extremely early and they've gone far harder than what they did back then. And we're seeing the results now. Now, whether it's going to be lasting is another question.
Yeah, is it delayed? Essentially, that's going to be the question.
Exactly.
How do they unwind all the the buying of So, look, it's fascinating. So obviously with that, it frames actually what I'm going to ask you now. How do you see this recovery? Do you see it as a continual V shape, given what's happening, or do you see it hitting a plateau at some point and going sideways? How do you see it?
From an economic perspective, I'm in the pessimistic camp, unfortunately. I think it's going to be an L. I think when people are talking about how quickly the downturn has happened, they're saying, okay, well, what we're going to see is when you're going to reopen the economy, it's going to be equally as fast, the recovery. If you go back over time and you look at how long it takes jobs that have been lost in a severe downturn to be recaptured, it takes years, if not decades. So to say that we're going to have a very speedy V-shaped recovery, I think to me is very optimistic, incredibly optimistic. Then you get into the side of what's going to happen with the coronavirus. Are we going to have a second wave, a bigger wave? Is it going to mutate? What kind of mutation will it be? All these uncertainties that we don't know. And the one key thing that I think a lot of people are forgetting as well is the behavioral aspect of what's going on. People are going to be changed. Their behaviors are already changing as we speak now. We look at the stocks that are absolutely ripping higher at the moment in the US. They are being supported not only by the Fed and central bank policy, but they're being supported by a belief that behaviors over time are going to change, which means that unfortunately a lot of those industries and a lot of those people who are in the area where things are getting eroded away, they're going to be in strife, unfortunately. That's what I feel. So to say there's going to be a very quick recovery from an economic perspective, I think is very, very optimistic.
Yeah, no, I can see. I mean, I've been following Peloton. I don't know if you know much about the Peloton story, but it's been a massive beneficiary of, fundamental shifts towards home, fitness, and it had a pretty reasonable story before, but like just reporting was up like 15% the other night. The game has changed. Obviously Netflix, some of these names, but then obviously you've got the airlines on the other side, which, is Continental, are United, are they going to be flying international for a year? Who knows?
Exactly right. That's the behavioural side of things that you just can't go and. Yes, I think a lot of younger people will go and try and revert back to norm, and they'll be happy to go into it because there seems to be that mindset that the virus is not as threatening. We've seen that from the data, so people want to go out and see the world still. But all it takes is for a proportion of the population, and not a very large proportion as well, to go and change their behaviours, and all of a sudden, like the investment landscape, the economic landscape changes forever. So it'll be very interesting to see what happens. But I'm surprised at how quickly the markets have latched on to the belief that we're going to see a V-shape or a U-shaped recovery. And I think the Federal Reserve is a big factor behind that. The put option, the reason that you got out of your short positions the other night, I think a lot of people are starting to feel the same way.
Yeah. I mean, it's just one of those insane situations. It's like, where else are people putting their cash? And there's still, before everything happened, there was still a stockpile of cash waiting to be deployed, whether it be in PE, whether it be in the markets. And now when the US dropped interest rates pretty much back down to zero, it's like, well, where's anyone going to get any yield? And the share market becomes a beneficiary of that.
So exactly.
It's insane times. I mean, you just look at it rationally, but the market is not rational. And, it can stay irrational for longer than you can stay rational, right? So
Definitely.
So as an investor, not as an economic outcome, would you be long equities, or would you be short, or would you do something else? Would you go buy a long-dated put? What would you do?
Well, we know they're going to be printing a lot of money. And we know that every time that a major central bank has tried to go and reverse ultra easy policy settings, they've had to go and revert back very quickly, start money printing again. So hard assets are really something that I think would be very worthwhile looking at. I've got to be careful. I can't give advice into specific things, but certainly things that can't be printed. Certainly, so you see gold's obviously benefited. Before I walked into today, I saw palladium and platinum prices were absolutely soaring as well. One thing I'm looking at as well, I'm not a big crypto nut by any stretch, but cryptocurrencies, if it's going to ever be a time that they're going to be shining, I suspect this is going to have to be the time, because if people are starting to go and doubt what a dollar is worth because of how many new ones are being printed, when you look at decentralized token system where there's a set amount, I'm very interested to see what happens in the cryptocurrency space as well, moving forward, because this, in my opinion now, this is the time for them to shine. If they don't shine in this scenario, I don't think they'll ever shine.
Yeah, no, it's actually a common theme. We had, Chris Judd, he came on a few weeks ago, and he also spoke about gold, and it seems to be a constant theme. And people are starting to look at, well, where's another currency that I can put my money into? Because if everyone is printing, it's not a Zimbabwean dollar sort of situation, but ultimately, like, it's a mini version of that. Where can I go put my money that will actually hold its value? So
exactly,
that seems to be the theme. No, it's just amazing that, you obviously got, I really appreciate the deep analysis that you've got to the market, and that comes from your experience. You started in 2002, maybe, thereabouts, I think?
Yeah, give or take, about then.
So you had September 11 and it went sideways through to 3, and then it started to track up towards like an almighty run. Like, you had the obviously edit.com, but you're my age, I think. So we finished university after that. And then you saw 2006, 2007, and then you saw the great almighty fall between, late 07, it's really started to have a bit of a dip, and then 08 just the whole way through.
Oh, 2008, September 2008 is a time that I'll never forget. I probably aged about 10 years in that period. That was.
How old are you, 10? You look pretty young.
No, I'm near on 40 now, but that was an absolute roller coaster ride. Words don't do it justice. No, what you were experiencing during that, it was similar to what we've seen in the last few months, but it went for basically a year.
Yeah, it was insane.
And it wasn't until Vikram Pandit from Citigroup, the then Citigroup CEO, came out with a memo saying that they were going to be profitable in the March quarter, and then that was the catalyst for the springboard to the next bull market in equities. But I tell you what, the 5-6 months beforehand, it was holding on tight, and no one knew what was going to come next.
Yeah, I remember I was in the States in 2009, and I just remember the day that it everyone was just beating up. I feel like it's a little bit similar to what's happening now. Everyone's beating up on the rally. Like as soon as it started to recover, you saw execs selling stock they had. No one believed it would go back up, and it just went 10, 11. It kept going. Had a few little murmurs here and there, but ultimately, we've been straight lines since then, pretty much.
Exactly. And you think about it as well during that period. Not only did we have the GFC, but then not long after the second round effects of the
Greek
GFC.
crisis.
The Greek crisis. No one can forget that as well. Like I remember going to having long lunches back in my banking days, another bank, on a Friday afternoon, and then there'll be a meeting that will come out. Oh, we've just announced that we've decided to extend the bailout for Greece. This will be coming through at about 3 o'clock in the afternoon in Sydney. So it means that this is daybreak in Europe. They've been going the whole night to go and solve another crisis, and they were trying to put out that fire and put out that fire.
Yeah.
So that was continuous, and it wasn't really until 2013 that we started to get some clear air. And then, of course, 2016 we had as well the China slowdown and the yuan devaluation back then as well, and that just sparked off another round of volatility. But as you said, all through those dramas, the US stock market, and even belatedly, I've got to say, the Australian stock market, just kept grinding higher, and then here we were at record highs not too long ago.
You're making me reminisce. It's I remember the flash crash, seeing it on my screen. Wow, that was literally just bids and offers just disappearing. No, it's good to chat to a contemporary, I'd say, of my age. But David, no, just amazing insights, and really appreciate your time. It's the level of knowledge you have and now bringing to the people. I think people are going to get a lot out of listening to you, and reading what you write. How can people track you a little bit more closely? Tell us a little bit about AusBiz and how they can see you perform like you are now in a way.
Sure. Well, ausbiz.com.au is the website address. You can follow me on Twitter. My handle is @Scutty, SCUTTY. I like to have a very dry sense of humour. Often comment about things during the course of the day, whether I agree with them or not. You might find a few criticisms of the RBA today after they released a statement of monetary policy. So that's we're live. We stream each day. I know via the website, via also an app on the Apple Store, and also via the 7 website. You can go there, and 8:30 through to 4:30 each day. We're running through then to go and keep abreast of what's going on in Asia and in Australia, of course.
No, amazing. And one thing before you go, and I did warn you about this, so you better show me your socks. So I got to see I'll show you mine. How's that?
All right, let's do it.
All right. Well, I told you I went for a run, so I'll go first. I've got my running socks on. Classic Adidas. Very simple.
Very good. Look like Western Suburbs Magpie. So I've got a very blue outfit on today, including my blue foolproof socks. So,
oh wow.
So they're very comfortable. I got sucked in by the brownie watching the guy walk around the desert, not getting a hole in his sock, and I thought, look, it's Friday. I want to be pretty comfortable, so we went with the old foolproof today.
Well, you look pretty comfortable. It doesn't look like it's too tough up there where you are, so
no,
you won't get any holes, I don't think.
Pretty nice here at Barangaroo today, so very relaxed. I might leave my shoe off for the rest of the day.
Well, David, that was just awesome. Thank you so much, and look, we'll be. I'm sure we do a bit of stuff with AusBiz as well. So I'm really looking forward to crossing paths again soon. Well done on everything.
Absolute pleasure being here. Thank you.
Cheers. Thanks.